Everybody, it's Michael with Distinct Group, Keller Real Estate. I've been getting a lot of questions about the state of the market, what's the market doing, how are interest rates impacting the market. So just wanted to take a couple minutes to talk to you about what I think is happening in the market. You know, you'll see this image in this video. This image was put out by our friends over at First American Title. And as you'll notice, you know, active units, 5,928 active units. So that's an increase of 1.6% week over week. So before, when we were trending with less and less inventory, we're starting to trend where we have more inventory. Personally, I think that's a good thing for our market. For a long time, our market's been struggling with a lack of inventory. So to see an increase of inventory is a good thing. I still think overall active units of about 6,000 homes on the market is not enough inventory. So I think it's still pretty competitive out there. Even though it's competitive out there, what I'm seeing is the home has to be priced right for the home to move. So even though there's low inventory, you can't ask, you know, pie in the sky pricing and expect your home to sell. You know, another thing that stands out to me is 882 pending units. So we're down almost 6% from last week. Part of that might be kids going back to school, so you know, we've pulled back a little bit because we were, you know, all the families were busy getting the kids ready for school or whatnot. But let's say this continues. So on this side, we have inventory increasing. On this side, we have pending units decreasing. So I think what's going to happen is that's going to start shifting our market. You couple that with, you know, raising interest rates. So now you've got high interest rates, you've got a lot of inventory, and you've got less home selling. I think we're going to switch to a buyer's market if that trend continues. Now, one thing that bucks that is closed units. So if you look at the closed units, that's 12.2% more homes closed than the week prior. And I think that might be because we're rolling into the end of summer, and so everybody was getting in their home purchase before kids finally went back to school. So it'd be interesting to see what the market looks like next week and how these numbers change. You know, days on market, 14 days on market. You know, we like to see, you know, 3 months on market. We like to see about 90 days on market to have a balanced market. So with us currently sitting at 14 days on market, that tells me that homes are still moving pretty quickly. You know, before when rates were 3-4%, you would list a home on Friday and that home would be gone by Monday. Now we're starting to see homes having to sit on the market a little bit. Maybe you got to drop the price a little bit and then the home sells. Might be another indication that the market is cooling off a bit. In terms of supply and months worth of supply, we've got 1.5 months. You know, like I said, you know, we want to see 3 to 6 months worth of inventory. You know, looking at the supply and inventory or the month supply and inventory, we're sitting at about 1.5 months supply. And like I said earlier, we've been struggling with an inventory problem. So seeing 1.5 months supply, I think it's a good sign. But to see a balanced market, we want to see that number hit 6 months. So like I said, if things continue to trend, high rates, more homes staying on the market, less homes pending, you know, and we start seeing month supply increase, I think those are all signs that the market is cooling, and we're going to shift from a seller's market to maybe a more balanced market, maybe even into a buyer's market. Showings, you know, showings are up by about 1% from the week prior. So I mean, I think that's good. I think that shows that, you know, some buyers are still out there looking and maybe they're just not finding anything. So that's just my 2 cents. Comment below what you think. Have a great week, everybody.